Not this one. Hold on, guys. Okay, I'm in the wrong slide. There you go. This is what we do when we negotiate with our service providers with their budget. If you have something different, at least listen to this and see if there's something that you should be changing, or maybe we should be changing to follow yours. So in that case, let Tony know, or Jackie. Okay. But this is our process, our budget negotiation process with our subrecipients. I'll skip through the definitions. You all know what a budget is. That non-federal share, they're talking about matching there. So if you made a promise to have a match, they're going to put that in the contract. Okay. And that means it's going to be legally binding. That's what that means. Matching costs required or voluntary. Once it becomes part of your agreement, it's binding. Remember when we talk about budget period, so your award has a period of performance, can be really composed of multiple budget periods. Okay. Different from period of performance, which is really the life of the grant. Identification of the period of performance in the federal award does not commit the awarding agency to fund the award beyond the currently approved budget period. So even if you have a 3-year award, if you were only approved for a 1-year budget period, that's all they're committed to paying you. Okay, not the 3 years until those budget periods are actually funded. I think in our case, they're mostly 1-year contracts, so we don't usually have multiple budget periods for city contracts. The purpose of the budget, you guys know all this, it's the framework. We want to see how you plan to run the program. It's to assess whether the organization is operating within planned parameters. And it's really that financial control mechanism that you have by carefully monitoring the budget in comparison with your expenditures. Fiscal folks, okay, the program folks are dependent on you to know if you guys need a budget revision. You won't know that if you're not monitoring your expenditures against your budget. You miss that budget revision deadline of March 31st, you're probably in trouble. Okay, because that means if you have any expenditures over what's been approved, you might not get reimbursed if your program does not agree to a revision request after that deadline. So the fact that you're monitoring it every quarter, okay, if I were you, by the 3rd quarter, I'll probably be looking at it monthly at that point. Okay, just to make sure that when that March 31st deadline comes, my budget revision request is in. Program folks, I'm going to quickly go through this. Please feel free to jump in. For EWDD service providers, this is what makes up our budget package. There's a budget summary. And in your handouts, the forms are actually included. I actually included a PDF copies of the budget forms. We need to see your schedule of personnel. There's a budget detail that's by line item. The budget narrative is important because that's where you explain every line item that you're requesting. Why do you need that? Okay. Some of you would submit without it. Your budget request is not moving without that for the most part. Okay. And whatever required documents that they need, we're going to go through that. And the spending plan for non-EWDD service providers, we actually have a spending plan for those who are going to be paid on cash advance. So that way we can kind of see a plan for what those cash requests might be. So for the documents that they're going to be asking you for organizational wide matters, they will be asking for your organizational chart. Your organizational chart must show all the personnel that's included in the budget request. You want to give them the personnel policy handbook. Okay, the personal policy handbook would usually talk about salary rates, you know, whether you have a funded or unfunded system for compensated time off, fringe benefits, those kinds of things. You want to send your cost allocation plan because chances are whatever you're budgeting for the city, some of them need to be cost allocated. They're not all directly charged to city program. If there's anything at all that is going to be cost allocated, and I'm assuming this is the case for all of you, you need to send your cost allocation plan. This is the plan. Go ahead.
Catherine, are you going to go into more detail about cost allocation? Because I always have a question about what we can use as a base for cost allocating our.
You're going to make me change my slide for tomorrow, Mary, because I wasn't planning on talking. I am actually tomorrow.
Okay, tomorrow. Okay, so I'll save my question for then. But yes. That is a question I have.
Okay. For personnel costs, you need to show your salary scale chart. Okay, sometimes there's a salary range or how much a certain position need to be paid. Job descriptions, because I think they want to see if that position would really benefit our programs. Any justification for salary increases. Cost allocation of multi-funded positions with a total FTE not exceeding. So if you have a position that's being cost allocated, you need to show the cost allocation plan for that. It can be based on estimates at that point, maybe based on how the cost allocation was last year, or maybe based on budget, okay, at that point, because you're just negotiating your budget. But once you report those expenditures, they should be based on actual. Okay, I have agencies who said, I would ask, why did you cost allocate this much, 50% for my city contract? Where's your basis? Well, because that's how we budgeted it in my approved budget, 50% of our time. Well, did he really spend 50% of our time to my city contract? Would be my next question. Okay, so you never base your charging to us based on your budget if it's a cost allocated position or line item. Fringe benefits, I think Gerardo was talking about having a little bit of flexibility here. Maybe not flexibility, but maybe being more restrictive, but we'll talk about that later. So your fringe benefits would include the government mandated payroll taxes, FICA, right? Your medical insurance premiums, your workers' compensation premiums, retirement, compensated time off, vacation, sick time. You need to know what kind of system you guys have on your compensated time off. You guys know the difference between these two, right? Okay. And then other costs, facility is big. That's usually a big item. So you need to send your lease agreement because it must be approved by the city attorney. Did I get that right, Tony? Okay.
Catherine.
Our favorite Fred Vogel is actually here. Go ahead, Fred.
Regarding the lease agreement, the original lease agreement should be approved by the city attorney.
Oh.
Any succeeding renewal of the agreements doesn't need approval.
This is why when Fred was still an active city employee, he was my partner. What Fred is saying, my slide is right.
I'm here. I was invited by Catherine to join this training because she said that she'll be giving me the opportunity to say goodbye to all of you. Okay. I retired January 2nd, 2021. So it's almost a year now. So it was nice working with you guys. I can see some very familiar faces here. My favorite Mary Kipe is here. And yeah, Tony Estrada is here. And my colleagues in FMD and the contractors. So it was a big opportunity for me to work with you guys. And in my humble way, I think I was able to help you also. So this is it. Goodbye. Yeah.
You are definitely one to make us all cry. Catching being federal leave. So we are like going to miss you both a lot. Thank you for all.
Hi, Lulu. Yeah. Thank you also.
Thank you, Fred. Fred has been really instrumental during my term at FMD, so I can't thank him enough. Just like you guys, I cannot thank him enough. He had my back the whole time. So thank you so much, Fred. I did honor you at my retirement party, right?
Catherine, I think there's a question.
Yeah.
There's a question.
This one from T. Prashado. Can you please explain the funded, non-funded compensation time off? The funded is you fund it as people earn it. Okay, so you know how your employees, as they are employed by you, they're earning vacation time, sick time as they work. Funded means you are already setting aside the funds for those. And most likely you will have to have them in a separate escrow bank account because you're already billing me for that. As your employees earn them, even if they have not taken the time off, okay, you are already billing me. You are already including it. That means it's funded. I think very rare that an agency would have that kind of policy. And that's usually described in your fringe benefit, I think. So that means when that employee takes that time off, you will no longer bill your grant because you had already billed it when that employee earned it. Unfunded means even as they're earning it, Okay, you are not billing the grant, but you will bill the grant when they take the time off. Okay, meaning you pay them as they take it. If you fiscal folks, if you don't know what kind of system that you have in your organization, please find out, because Edwin's going to ask you. Actually, your program auditor should be asking you when they're negotiating with you. If there's anything at all that talks about vacation there, your program auditor must know if you have a funded or unfunded system. The hard part about funded is it's kind of difficult for us to track. Well, did we pay them for this or not? That's when it kind of gets challenging for funded positions. But program auditors, if you're not already asking, you need to ask what kind of system they have. Yeah? Did I answer that question? Yep. Okay. T Prashado, I don't know what T stands for, but hopefully I answered your question.
That's Terry from Los Angeles Conservation Corp.
Okay. Terry, I hope I answered your question. Your facility line item would also include any security expenses, repairs and maintenance, depreciation, utilities, usually. Okay. Communication, basic stuff, equipment, lease agreement, or if it's a purchase, you need to talk to your monitor because that needs prior approval. Most of the time, I think even from the state, right? We don't even have the authority to actually approve it. We have to go to the state. So those kinds of things, if you know you're going to purchase equipment, that has to be there early on. If you revise your budget around the last quarter of the fiscal year, say you're buying an equipment, chances are it will not get approved because you're buying it so late in the year. But why is that? What will be the benefit to the program if you're buying it this late in the year? It will be the question you'll be getting. This is basic stuff, insurance, professional service agreement. There's a question. Should a lease agreement be allocated across all contracts? If so, what is the best way to allocate costs by percentage of youth served or FTE? Did you guys get that question? Usually facility, because it's organization-wide, it's very rare that I would see a fixed amount for contracts. Usually it's cost allocated. You may have some spaces where it's dedicated to a space dedicated for business store center, or a training room for business assistants for small businesses for CARES Act funded programs, for example. But you will have some shared costs, reception, lunchroom, meeting rooms, right? That benefit all your programs, meaning you have to cost allocate. The question is, what is the best way to allocate that to the different programs? That needs to be in your cost allocation plan. How do you allocate shared costs like that? What would be a fair measure of that benefit for each of the programs? In EWDD, we allocate everything based on salaries or FTEs. A big office, for example, if you are higher salary, right, chances are you're occupying a bigger office space. So to me, that kind of gives a good measure of how we benefit. I'm thinking probably FTEs will be it. For training rooms that are used by your youth participants, maybe number of youth that's enrolled for those different programs, maybe. So you really need to look at it and see what works best for you. The key is it should not be too burdensome. It's just not efficient anymore. The idea of a cost allocation is you have to have a fair measure that's appropriate, right? But you don't want it too detailed, too hard to track. You lose the benefit of allocating to begin with. If it's that hard, then I might as well just directly allocate everything, right? So you gotta weigh the cost and the benefit from that. And I wish I can say you should base it on FTE or number of participants here. I really wouldn't know. It really depends on your organization. But if you need a little bit of assistance on what would be best, you can certainly seek assistance from your program auditors or even FMD. But I would hate to address that here because it's different for everybody.
Yeah. There are some, Catherine, there are some agencies that they use space usage, and they usually give us like a diagram. Mm-hmm. And that will do the square footage that each of the programs use. So
and that's what I usually see. Actually, there's the space, a floor plan where they show, okay, this space is, for this program, this one is for this one, but you will have a common space there. And that's where you need to really decide how you cost allocate that common space that you guys share.
Yeah, but that's the hard part, because you take us, we don't differentiate, the CalWorks kids aren't in one spot and the foster kids in another. We have 7 or 8 case managers and they handle all the kids. So we're doing the whole space. So it doesn't work if you do it by kids because we spend more.
Yeah.
The WIOA kids are more labor intensive than the.
In my humble opinion, I don't think space should be allocated based on participants.
Yeah.
Like for us, we're using it based on direct salaries, our employees working on different programs. That's how we
Yeah.
distribute our space.
So
Because I'm not going to ask Frank or Tony, well, how many kids did you serve for this program? Because I have space to allocate. We don't do it that way. What we did is just to base everything on people directly charging the different programs, and we spread our costs that way. And you know why that's easy? Because it's easy to maintain consistently. It's
yeah,
data that I already have. I don't have to create a separate data so that I can cost allocate a reception area.
okay. So so this is my question, Catherine. This has always been my question. I have a case manager. That case manager does all the different programs. So how do I figure out?
I actually have an example for this tomorrow. For case managers, for example, maybe you can pull all your case managers. If you can pull all their charges, meaning they don't have to keep track of who they're serving today,
Right.
who they're serving. Just pull all their salaries together. And then once you have everything in that pool, now you cost allocate based on participants. How many were enrolled in each program to allocate that cost, that pool. Okay, without having to ask your case managers, you need to keep track of your time by participating.
Okay.
That's just too much. I mean, even for me, if I say, are you really doing it this way? You're spending more time trying to cost allocate
Yeah,
than
that's right. Yeah.
than the cost itself, right? So you really have to balance it that way.
Yeah.
My suggestion for that is to have case manager salaries pulled together and then allocate it later based on number of youth enrolled, number of youth registered, number of placements, whatever is directly related to the time of the case managers.
Okay.
That's something that you figure out.
Okay. Thank you. Yeah, got it.
Okay. Travel. Hopefully there wasn't a lot of traveling.
Question. Sheila has a question.
Sheila?
Yeah, Sheila.
Hi, Catherine. Now that we're talking about cost allocation, can we?
You guys are jumping ahead. Okay, but go ahead.
Oh, sorry. How often can we change the cost allocation methodology then? Now that we have more information based on this, training.
I'm hoping not too often. But if it's something that you're ironing out, set that straight now. That way it's something that you can consistently implement moving forward. Once it becomes part of your cost allocation plan methodology, you have to follow it. And Edwin comes in and say, why did you allocate this space this way when your cost allocation plan says you're going to allocate this way? Why? So if you don't have that nailed down yet, I suggest you put that together and you figure out which costs you're going to pull. And once you pull them, you're going to have an allocation base to distribute them, right? Figure that out now.
Yeah,
Because
but Catherine, with our youth programs, and I don't know if this is true with the other programs, you guys keep giving us money. I mean, I'm not opposed.
that's a good problem to have. That's a good problem to have, though.
Yeah, but every time you give us more money, it changes.
No. Your cost allocation methodology should not change just because you got money. When you get more money, it just means there's more funding sources that are taking a share of what you're allocating.
But it also
Methodology
means
should not change.
if you're doing it on the basis of youth, it also means.
No. What's changing there is not your methodology because you're doing it based on youth. Your methodology is allocating it on youth. What's changing there is the amount of share that your multiple sources will get because now you have more to spread the cost to.
Yeah, so
your methodology of spreading it, allocating based on youth, that methodology did not change.
I get it. Okay.
One more question from
Hamanot, from El Proyecto.
Yeah, hi. My question is are we on the same page? I like your idea because this is one of the things that we wanted to see. But is our program advisor and whoever is going to be approved our budget, are we on the same page? Because this was not easy previously.
I'm going to let Tony and Jackie respond to that. Jackie, Tony, they're talking about items approved that are cost allocated in their budget. I think they want assurance that we are on the same page, that this is based on cost allocation. Is that a question, Hamanot?
Okay.
I can't respond for them, but I'm pretty sure we're on the same page. The thing is that cost allocation should really be in place, not when you're billing us, but hopefully something at the beginning. That way we already know how you're cost allocating things, and we're not trying to go back and forth when you're already asking for money.
But to answer your question, Hamana, we have some of the monitors are actually attending this training as well. So we're all going to be on the same page if it wasn't clear before.
Okay, thank you.
Sheila?
My question was whether it's kind of similar to what everybody's talking about, whether we can do a retroactive adjustment to the cost allocation if we change our methodology in the middle of the year.
You just have to document, why are you changing it? Is it because you're trying to change the allocation base to be more reflective of the benefit? What I'm saying is just document it if you need to change, and then you implement that moving forward. What we don't want to see is you're changing your methodology every time you have a new funding source, right? Every time there's a new program. The methodology should not really change as much. So revisit it now if you must, but be consistent from that point on, because we're going to look at that cost allocation plan that you guys say you have. When we check for the documentation from things that you build us that they're supposed to have been cost allocated, we will ask for that cost allocation plan. And if it's different from the methodology that you used to bill us, you may have a cost allocation issue. One thing you don't want is to have a cost allocation issue. We will go through that tomorrow. You don't want a cost allocation finding, and I'll tell you tomorrow, because otherwise we might have a whole other discussion. You do not want a cost allocation related finding, because that usually means what? A higher. What, Mary?
I was taking notes and I wasn't paying attention.
So you don't want a cost allocation finding, right? Because that usually means
Disallowed cost,
question.
question cost.
There you go. So please revisit if you need some kind of technical assistance or guidance. Again, we cannot set it for you. We can just give you guidance on how you should do that, because every organization is different. Okay. Just keep in mind, it shouldn't be too burdensome. Transportation, basic stuff, others. Participant-related costs, these are not asked from everybody, so I wouldn't go too much into it. But our youth contracts, for example, will always have this. And this is where they kind of struggle a little bit, because there's a minimum number that they need to spend on this. I think about 30% of their contract needs to be spent on this category. So that provides another threshold that they have to meet on top of everything else. For business source centers, could that be your subcontractors? Is there a minimum amount that they need to meet on subcontractors? That's what I'm talking about here. What are the mandated expenditure requirements threshold that your programs are requiring? You need to know those. Subcontract, you need to submit the subcontract agreement. They want to see the scope of service. Again, your procurement documentation. Your program monitors are going to ask that. Equipment, pretty basic stuff. Okay. Do not buy equipment without talking to your program monitor. And they're saying that's generally not allowed after the second quarter of the program. They're going to allow you to purchase equipment that's actually going to benefit our program. So if you're buying it late in the year, why? Okay, so this is what they're saying here. If you're getting beyond that second quarter, well, you talk to your program monitor. Again, they're going to ask for procurement documentation. Indirect costs, we will talk about this tomorrow. 10% budget flexibility rule. Is Philip Tran here? This is the favorite subject, and I think PACE too. We're just going to go through the basic rule and then what's exempted from this rule. And then from there, I'm sure you have a lot of questions. So for the non-EWDD departments, we gave our service providers some flexibility on their budget so that they don't have to go back for a budget revision every time there's a change. It's not a lot. This rule is really to provide you guys, our service providers, with the privilege, it's not a right, of some flexibility. Some, meaning it's not a lot. Okay. Expenditures for certain budget line items may exceed the budget without having to ask your program monitor for a revision. And this is the condition. The change should be within 110% of the original budget for that cost category. So if you have, for example, $100,000 budget for personnel, you can have expenditures that's 110,000 without having to ask for a budget revision if it meets the other requirements that we're going to go through after. So it's not a straightforward, oh, I'm within 10%, I'm okay. Maybe not. Okay. And then of course, you have to have savings from other cost categories that you're moving to cover that excess, but it also depends on where that savings is coming from. Okay. And of course, your total expenditures should not exceed the contract amount. The thing here is not to give that much flexibility. It's just to make it easier. But remember, as we get down lower into those tiers, you will see more restrictions. For the state, for example, they give us, 3 million. We don't even have a detailed budget. But as we now go to City of LA and we're contracting with you, the nonprofits who are actually down on the ground providing the services, the more detailed those budgets will be. Okay, the 10% flex rule is not to give you that much flexibility, just enough that we can still control where you spend the money or monitor. The 10% flex rule is really to just give you room for minor revisions. How's that? I think that's fair. Minor. See, generally reserved for minor revisions. Here's where they're not covered with the 10%, meaning if this is any of this one item, you need to request a budget, even if it's less than the 10% that we're talking about. Cost of living increases. Okay, let me go through the list and then you can start asking your monitor some questions. Salary increases inconsistent with the salary scale chart that you provided your program monitor. Did you change that salary range? Was it board approved? Those kinds of things. If you're adding a new position that was not included in the approved budget, now suddenly you want to add a case manager, it wasn't there, you need a budget revision. This is a Gerardo clarification. If there's an increase in FTEs for existing approved position classifications, they want to know. If there's an increase in fringe benefit rates. And I think this one, it's not written in a directive yet, but I actually met with your program monitors before this training. What they're saying is, and this is not in any kind of directive because they are actually trying to draft that right now, is maybe they will allow some flexibility in the fringe benefits section of your personnel if the change is not more than 10% of the total budget for fringe benefits, except for the ones that are mandated that are kind of fixed, okay, like FICA. So that's not written in stone yet, but Gerardo said that they might put that in the draft directive that's coming up. And Jackie was in that meeting too. So your EDD monitors were in that meeting too. Increase in facility rent. Okay, they want to know. And my other question is, Tony, to answer it later. If the increase in rent is because of a cost allocation where our program is getting a higher share, would you still need a budget revision? Let's answer that later. Okay, if you are adding a facility lease or subsequent amendments to your facility lease. If you're adding a consultant, professional service contracts, you're purchasing new computers. New computers, they want to know, always. Or even if you're increasing the approved budget amount, they want to know. If you're buying additional computers, your program monitors need to know. This is a new thing, not in the directive yet, but they're saying a new software application in excess of 1,000. Subcontractors, addition, deletion, or change in the subcontract's approved budget amount. Equipment purchase or lease, addition of a new line item, okay? Reprogramming of unexpended funds from unfilled positions. I see Mary kind of shaking her head. And if the savings came from participant-related costs. And why is that? Because you are required to meet a minimum expenditure requirement in participant-related costs. So before you reprogram any savings there, they need to know, because I think they want to make sure that you've at least met that minimum requirement. So if your savings coming from participant-related costs, you need to talk to your monitor for a budget revision. When in doubt, please call Tony, Donnie, Makita, Jackie, Nisa, okay? Modifications, let me just quickly do this. Review your expenditures against the budget to know deviations so you can timely ask for a budget modification. Take appropriate actions when you see that spending adjustments is not in sync with your budget anymore. Read Bentley's communication to you, Kayum's, Glenn. Those comments are there for a reason. Read them. And most of the time, if you're not monitoring your budget, it's probably what's going to alert you that you're getting near here. I'm already disallowing some. Please talk to your monitor. Purchase computers and equipment no later than the third quarter of the program year. Oh, my other slide said second quarter. Which one's right? Okay, let's address that. Submit requests for a budget modification on or before March 31st, not at closeout. There you go. Questions for your program monitors? They are here, guys. Mary, why don't you start? You kept shaking your head the whole time.
Yeah. Well, the one, and I've actually mentioned this to Tony before. The March 31st deadline is really difficult for youth providers, particularly as it relates to our program, our participant costs. Now, I understand that you don't want us to withhold wages and other participant costs from our kids, but it's really difficult to estimate how many of those kids are going to work their full 100 or 120 hours. And in March. So if you could give us another month for a budget mod, that would really help us, because we want to put enough money aside on the one hand. On the other hand, we don't want it to go to waste. We could use it in other areas if the kids aren't going to work their full hours. So that's one thing that always is of concern to me.
Oh, who's gonna take that, guys?
So, Mary, what we can do is, considering the positive procedures that we have in place, what we can do is we can do it on a case-to-case basis. So, if you give us your justification, we can definitely work with you. We're here to work with you. We're not here to limit you or hinder your ability to provide services or programming. So, we're definitely here to work with you as much as we can. Just get in contact with your program manager, and we will definitely work with you.
And Catherine, in WIOA, we don't have a amount that we're supposed to expend on participant costs. That's only in our quote summer programs. We have an amount that we are supposed to expend on out of school youth.
Yeah.
And we have an amount that we're supposed to expend on work experience.
Mm-hmm.
But that can also, that's not,
yeah.
Work experience doesn't equate to participant.
Yes. Yeah, I got it.
Okay.
Meaning work experience can actually be staff costs.
Yeah. It can be staff costs that are involved in the work experience component of the program.
Yeah, it's not participant related, but there is a requirement for work source centers though, right?
Oh.
I think 30%, 28% on training they need to meet. What about business source centers? I don't know. Business source centers have been quiet today. I haven't heard from any of you. All right, any more questions?
One more. Nancy and Maria. Maria, are we able to charge LA Rice grant for the year and bonuses per household policy?
Question from Maria. Are we able to charge LA Rice grant for year-end bonuses per in-house policy? Tony? Donnie? Bonuses for LA Rice programs.
Tony, what do you
You know what? Let me get back to you on that one, because I'm a little perplexed on that one. So I'll definitely get back to it. Provide an answer by tomorrow.
Just be careful on those bonuses, okay? They have to be based on, I think, merit or something. Or
I'm sorry. Is that for participant-related costs, like giving them an incentive? Okay, I'll definitely get back to them tomorrow.
Sorry for staff, and we've never billed LA Rise. We just put it out of our money, but we're about to dispense some or disperse some budget. I mean, bonuses, and our payroll tomorrow, and then we're gonna invoice on the 3rd. So if there's any way you could tell me by tomorrow, otherwise we'll hold off.
Okay.
To be honest, this is the first time I ever had to deal with this. So let me get back to you with.
Thank you.
Just approach with caution. I didn't go through the cost principles of the uniform guidance. The uniform guidance has a list of all the costs that are allowable and not allowable. I need you guys to go into that to make sure that you're not charging what you're not supposed to.
Hi, this is Alicia Ramirez from the Housing Authority. I do have a question about moving funds around between, related to participant-related costs, right? For example, if we know that that we don't have enough interest in work experience versus training, and we have funds available in work experience, can we move the funds around to training without permission?
Yes, this is Ramon. Hi, Alicia.
Hi.
I encourage you guys to move the money. I encouraged Hector before to move the money from work experience to either hire more staff because you guys don't pay rent or have a lease, or to put it in training because work experience does not give you performance.
Okay. All right. Very good. Thank you so much for the answer.
There's a question. Is Makita here? I think Makita should take this question. Makita. Okay, the question is, how many budget modifications are we allowed per year?
That's funny because we talked about that.
Thank you, Magida. Take it.
I mean, I think what we said was we would like to do 2, right? Because we're talking about the time frame that we allocate funds, reallocate funds, redistribution, right? And so that would be ideal. However, as Tony mentioned, when we talked about the March 30, first deadline, I think that we are willing to be flexible on a case-by-case basis, but ideally we would like to modify when we have new allocations out to the agencies, and it shouldn't be much more than that. And then obviously, if it needs to be done, then you have until the deadline that we set forth. And I don't know if that.
Makita, hi, this is Nancy with Goodwill, and I asked the question. And I asked the questions because we've had a lot of change in staff. So to keep up with the budgets, I feel that it's important to change the budgets as we go along and those changes are taking place. And that's kind of the reason for the question.
And I'm aware of the staff change, yeah. So definitely, I think that if you connect with your monitor and request the budget modification because of the staff change, I think that that's something that we would be able to accommodate.
Okay, sounds good. Thank you.
Mm-hmm.
And I think if there's a reasonable justification for a budget modification, even if it's getting close to March 31st or beyond, I think what they're trying to avoid is you do budget modification every month.
Right.
Yeah. So
for that.
But if it's a completely reasonable request, I'm sure our program monitors are willing to work with you folks.
Sounds great.
Yeah. Anything else? I skipped cost principles. I will quickly go through that tomorrow. Any more questions? There's one question that I know some folks are dying to ask is SUI. If you exceed what's in your line item budget, you are actually allowed to do that. Just provide the explanation. The rate there is not really applied to salaries. It's 3.4% for the first 7,000 salaries of an employee. So it's really not a rate that you can apply to whatever charging us for salaries, right? So if you're going over what's your budget there, it's okay if you explain to Glenn and Kayum and Ben. You just need a budget modification if that excess is not going beyond the 10% flexibility rule. Okay, but there is flexibility on that one. Moving forward, though. Moving forward.
Yes. What are the cost categories? I mean, is it salaries or is it personnel costs, for instance?
Personnel is category 1,000, which includes salaries and fixed.
Okay, all right.
But Catherine, that might change regarding the 10% flex. We might just single out benefits separately.
Yeah. So they may give you flexibility on SUI, maybe workers' comp premiums, those kind of fringe benefits, if you can provide a policy that says, there's a change in your policy, except for the fixed ones. So our program authors are looking into more flexibility in that area, but nothing is set in stone yet. I'm just saying,
one of the things that does change is that, I don't know about other agencies, our open enrollment for medical coverage is in November, and the new rates take effect in January. So it's a annual budget, annual cost from January to December. And of course, our budgets are July to June. So we do always have an adjustment in medical costs in January.
Did you want to say something? Okay.
I was going to tell you, we rarely hold medical expenses.
They usually don't hold.
Yeah, I know. I was just asking about the actual category.
Okay. Anything else? Any other? Martha has a question. Martha.
Yes. Hi, this is Martha Lacomba. I have a question regarding the LA AAA grant. So we just got an letter regarding phase 2. And we're going back and forth trying to understand this part. We were told it's part of the phase 1 grant, but is this an extension of the phase 1 grant? Is it, even though it's the same contract, and if so, are they separate grant contracts or separate buckets that we have to do 2 different billings and 2 different closeouts? I hope I'm not sure if I made myself clear.
Who can take that from WDD?
I think I can answer that. Is that the LA CCC? Is that the question?
Yes, sir.
So that grant is, we restarted under phase 2. We closed out phase 1. So you're treating it as almost a new pot of funding with the new budget. It's a 3-month budget. And there should be, your contract amendments went out. You should have already submitted a budget to your program manager for 3 months, October 1st through December. And so you're going to bill against that original contract number, and there's an amendment. So phase 1 is closed out. We closed out, recaptured funding, redistributed funding via a contract amendment, and it's only for a 3-month term, sunsetting December 31st.
Okay, thank you for that.
Yeah.
Basically, the question is, if there's saving in a personnel cost, I mean, if the over budget in a personnel cost, if there's saving in the other costs, can we apply that to the personnel cost, that means salaries and?
As long as the savings is not coming from participant related or whatever, there's an exemption, can you then use that savings to cover excess in personnel? Yes, you can, as long as the excess expenditures in your personnel that meet the criteria of not needing a budget revision. I think is the answer to that one. So if you're trying to cover a position that's not in your approved budget, then no, you need a budget revision. But if it's just adding a new person and then the FTE does not change, a change of position, maybe, then it might be okay. With personnel, it kind of gets tricky because they do want to be able to maintain the approved positions, the approved classifications, and the FTE. So you don't have a lot of room there. I think you only have more room under others. But personnel, they do want to control who the people you're charging to our programs. Yeah. Any more budget questions? Nancy, are you okay? I see a question look in your face. Are you okay? Okay. Another question.
I did have a question.
Okay.
I had a question about, and I don't know if I misheard when you were talking about support services, that there was a percentage tied to it.
Yeah, for some programs.
Okay. Because I know for like SYEP, there's a percentage dedicated for participant related costs. But I don't know if it's also, do we have to split out those percentages between work experience and supportive services, or if it's all one lump?
I think work experience is just applicable to WIOA youth, right, Makita?
I'm sorry, please repeat the question.
I just wanted to get clarification if I misheard on if there's a percentage that has to be attributed to supportive service. I thought I had heard 30% or something like that. But I know that there's certain percentages, like in some of the contracts, where it has to be strictly a certain amount for participant related costs, such as SYEP. So I just wanted to get some clarification on that. If that is, and I know if it's varied by contracts, and if so, which contracts would that be?
Yeah, it varies by contract.
It doesn't. I think Mary clarified that that's not the case for WIOA. So there isn't a threshold or percentage necessary for WIOA when we're talking about supportive services.
I think, Nancy, you heard when I said for adult undistillated worker, they are required to spend a certain percentage on training specifically. So I think that's what you heard. So it's
Okay. So I must have misheard on that. I just wanted to get clarified because
it's not a
perfect.
Clarification. Yeah.
Thank you.
Maria has a question. Thank you, Nancy.
Yes, if someone is allocated 100% to a government, to a city grant or WIOA or general fund, and that person goes on maternity leave, would the grant cover her maternity leave?
Tony?
I would normally say we would have to look at, review your policy, your personnel policy handbook. And I would advise you to go to that first before, because we're gonna review it as well. So before we accept a new budget modification or the payment of anything, we will review your personnel policy handbook first.
Okay.
So really, if your organization's policy is, of course, you pay somebody who goes on maternity leave, right? That's family leave, then yeah, that's allowable for the grant. Same way for us, if we go on maternity leave, we're charging our salaries to our grant because it's a city policy. It's a fringe benefit. Yeah, so that those are allowable, guys. Yeah.
Thank you.
One more question.
Celerin, that's a question.
Yes, I do. My question is on the schedule of personnel. So when we prepare budgets, we put percentages, of allocation. And then over the course of the grant, some employees may work, more time than was budgeted. And at some point, when we have monitoring reviews, we've seen some findings that we charged more than what is on the budget. But I just wanted to confirm that we're supposed to charge based on actual time spent, not on budgeted time. Because I believe the federal guidance is to charge based on actual time spent. So to me, I feel like those type of findings, they've been contrary to the federal guidance, because we may have an employee who spends more time on a contract than we have budgeted, and we see that cost being the kind of questioned on the monitoring reviews. So could we have a definite guidance from the team on how we're supposed to manage those kind of variations?
The answer to that is, should the salaries that charge the city be based on actual time worked? Definitely. No way around that, actual time worked. But if that actual time work kind of now exceeding what's approved in your budget, okay, because your program monitors want to be able to see, you're increasing my FTE for my program. Why is that? And then you can explain, well, because we spent more time on this for the pandemic, and that's why the FTE increased. Okay, so that really is more of a budget issue that you have to discuss with your program monitor, because you may have to revise your budget in order to be able to charge your actual time that you work on the project. Because when you bill us, Celerin, when you bill us, it has to be based on actual work.
Good. So as long as we have, a sufficient amounts in the salary budgets, we shouldn't have to do a budget modification, maybe to.
Actually, that's what I thought, but I think your program monitors, if there's any increase in FTE at all, and maybe they're willing to give some flexibility on this when they write the directive, but if they're increasing FTE for city programs, they want to know. They just have to decide now, are they going to require you guys to do a budget revision or not when they write that directive? Okay, but right now, from the last meeting that we had, is if there's any increase in FTE at all, I think there should be some flexibility on FTEs if it's really justified. I think what they need to approve first, if you're actually adding a new position, that's when they need to know. FTEs, there might be some flexibility there that they can afford to give, but I will leave that up to them. Right now, they want to know.
Okay.
So Tony, Makita, Jackie, probably something for you guys to increase in FTEs is okay, because they really need to charge us the actual time that worked. Now, if that exceeds what they have budgeted, will they need to work with you to negotiate a revision? Is the question. Okay, but Celerin, the answer is always actual time. Even if you're cost allocating, your basis for your cost allocation should be actual data, current data, not budget data. Okay.
I agree with you, Catherine. I think you brought up a good point earlier where you said that they get to a point where you have to start checking how much you're charging us per line item on a more frequent basis, especially when you get to the after the third quarter. That way, you can anticipate and then react. That if you need to make any budget modifications, like I said, we'll work with you on a case-to-case basis, and as long as you monitor, you track that as well, and not to wait for the end of the year or the closer to let us know, hey, by the way, I need to make this budget modification when you've known for the last 3 months that you were exceeding those hours. So just, the more you work with us, the easier it is for us to make those approvals. We're not here, like I said, we're not here to work against you. We're here to work with you.
And really, our program monitors don't want you to have to pay for something that you actually incurred, but you were not going to be paid for just because you missed a budget revision when it was due. Okay. The point of that is that way you can recover what you should. Okay, if it's really benefiting the program. The problem is when you don't ask for it in time. And I understand there's some things that kind of happen at the last month. There's a sudden surge of certain things. But if a budget revision would have taken place before, maybe some of it would have not been disallowed. But if there's really not avoiding it, then work with your program monitor. I know they have a March 31st, but just talk to them. I mean, we never want for agencies to have to not be paid for something that they have incurred for our program because of administrative findings that you guys missed.
And also, I would also highly encourage you to look at the invoices or the invoices that Glenn the Glenn and his staff provide you on a monthly basis. That will give you a clear indication of where you're at with your expenditures. And if you pay close attention, then you can make the adjustments as needed.
Yeah, and Tony, we would probably recommend that if you're over your personnel costs, then you should really request for a budget revision to be safe.
Thank you, Glenn. So for our program monitors, I think this 10% budget flex is something that agencies have been struggling with. I think we need to update that directive like we talked about in our internal meeting so that they have clear guidelines on what's allowed and what's not. So at least this gives us a forum on what those issues are that we can make sure that they are addressed in this directive that you guys are about to issue.
There's, Catherine, there's a request here. If you can review the vacation funded and unfunded methodology again.
Review meaning to explain it again. So it really depends on what your policy is. How do you fund compensated time off, vacation, sick time? For us, we have personal leave. Okay, how do you fund those? Do you fund those as people earn them? Like, for example, for us, every month we earn, say, 10 hours of vacation. Do we charge for those as people earn them, or do you bill for those when people take the time off? Okay, funded is you're funding them as people earn them. Unfunded is when they take it. That's really the simplest way that I can explain it. If it's funded, meaning as people earn them, and you're billing the city for those, and your employees have not really taken the time off, and yet you have the money because you billed us, because you're a funded system, those funds really need to be set aside in a separate account so that you can then go to that account when your employees take the vacation, then you can take the money because we already paid you for it. You billed us. It's rare that I see a funded system, though. It's very hard to track.
And Catherine, the funding method requires a budget revision or in the budget under fringe benefits, vacation accrual.
And that's why your monitors need to know. Negotiation phase, oh, I have a funded system. That means I have to set aside money for vacation. If it's not in the budget and then we see it in the expenditure report, we're not paying for it. Okay. So it's something that you need to put in the budget working with your monitors. Yeah. Another question. Oh my God. Oh my God. That's I knew this is going to be a hot topic. So you sit here. Where are you? Alicia Ramirez.
Yes. Hi. I'm sorry if you've already answered this, but going to the schedule of personnel costs, is it possible, I mean, you're approving basically the job classification, not the person, right? So is it possible not to list the employee names on the personnel cost, or is that something you require?
required, but I'll let,
I'll answer it, Catherine.
yeah, go ahead.
Alicia, this is Ramon. For your initial budget that you submit in July, for a new programmer, we'll give you up to a couple of months, 3 months without a name. But after that, you have to put a name. We want to know that because we're not going to keep paying money if there's no name, position
You need
attached
to know
to
that
it.
it's filled, right, Ramon?
Right.
No.
After a couple of months, you have to fill the position.
Right, no, but the positions are filled. My question basically is so that we don't have to.
No, we want the name. We want to know the name.
But it's also included in the cash request, right? When we
The
submit a
expenditure report, yeah.
Right. So that's why I was wondering if it's possible not to include the name so that, we don't have to continue, we don't have to do a budget modification whenever someone leaves and a new person comes on board.
Yeah,
In regards to that question, the cash request it should be based on the approved budget.
That's correct.
And if you add a name and we don't have it under our approved budget, it's gonna be a disallowed expense until you provide a budget modification.
So I have the same issue. We hire students. We hire a lot of students and they change frequently. So you want us to do a budget mod every time a student leaves and we add a new student.
Right. And my question was also because we also hire interns. And,
yes.
They have a limited lifespan. So after a certain number of hours, we have to basically get in a new pool of interns.
Yeah, that's exactly. It's kind of the same thing with us. So for instance, our spring quarter starts after the March 31st deadline. So we'll have lots of students leave winter quarter because their schedule changes and they can't work for us on spring quarter. And then we'll hire some new students, but it's past the deadline. So couldn't we just put, these are all part-timers. These are not our career staff.
Catherine?
Mm-hmm.
Yeah, I think that's, we still need, to know, the names and, because, we need, to track, how do you track that? Because, even though the intern, there is a employer, employee, relationship, right? So we wanted, to make sure that, that's when, we verify, those staff, then, that's, we need, the supporting documents. So that's, from the fiscal monitoring, side of it, we still need, to know, those names.
On the fiscal monitoring side, the expenditures, we definitely want to name because we're going to track that to your payroll register. But maybe something that needs to be considered if you want the name in the budget, because that can change throughout the year.
Yeah, that's what I'm talking about. Yeah.
So maybe a decision or something that our program folks need to consider in writing that directive. Do you want the names in your budget? As long as they provide it in the expenditure report on who exactly which employees we're paying for.
Right, because that's what we have on other grants. They don't necessarily want to know who is working on the grant in the budget, but we have to submit the supporting documentation, obviously, for billing purposes.
Yeah, and Kayum just told me that if the name is not in the budget, we're not paying. So obviously an issue that we probably need to clarify, program folks, so that they know moving forward. It's your decision, but probably a decision that we need to make. It's half of the program year already, so I think our agencies need to know. So
yeah, I like to just add also is just the way the job market is right now. And, we've even at our agencies been considering temp agencies just because, it's really difficult to hire. So I think the operations need to be flexible with what's currently happening in the job market.
I understand. So go ahead.
Oh, I was going to mention that HACLA, UCLA, LAUSD, they've always been handled special. So they are different, and I think we always handle special. So they're always going to be different than the other ones. But yeah, these questions may not apply to all agencies, but I know HACLA and the big bureaucracies like the City of LA, they're treated special.
Bureaucracy?
Bureaucracies.
I have a question. This is Carol Champion. And basically, when you do the budget, normally what happens is you have your FTE and you have positions there. So if one leaves and you put somebody in that same position, then that should be with that FTE, and it's consistent with the budget. Should not certain positions be covered? And that would be,
so
yeah.
one of the issues that we have dealt with in the past is that when we get audited by the county or EDD, they go through all the documentations as well. So they want to know who we're paying and who we're paying, and whether there are the information that we're providing, whether it's ledgers or any accounting documentations matches what we're paying. So that's what we're requesting, that we do have the names of the individuals and not just the positions.
Well, yeah, and the budget would have a name, but then halfway through the next month or whatever you have someone else in that position, you would just add that name onto that next to that other person. And then, I don't know, that it's in the same position though. It's not changing any of the positions, but not saying not putting the name, but changing, adding to that position, or the FTE does not change when you look at it.
I agree with you, but it's a tedious process, but this is something that even us as the city of LA has to deal with when we're applying for state grants or even federal grants. We have to, anytime we have a staff who's left and we have vacancies, we have to notify them when we hired somebody, because when we start charging them, we still have to indicate, it has to match a name. So I understand how tedious it is, but it's something we also do as well.
I agree. Also on the WIOA, we have to do a special schedule that shows each of our staff, how they're spread across the board on all agencies, so that we don't exceed those salaries. How do they know how much we're charging to each program? And making sure that we're not overcharging one and the other.
I have a question.
Yes.
And more, maybe a recommendation. Typically, what I'm hearing is that the concern is having to redo the entire process of the budget modification, right? So because I agree that it is not changing the amount and the hours that have been assigned to particular job. Would it be possible to have an attachment or to submit as part of when those changes occur, to submit a table of the names that are being replaced, just so all the information is still in one place that's attached to the FMD can attach to their records? Is that possible, Catherine?
Oh, because
Tony?
for me, we're holding down the agencies based on what you guys put in your budget. So if you are okay with those names just being provided on the reporting side, I'm okay with that. But like Tony said, sometimes he doesn't have a choice when he already provided the names to grantors, for example. For me, we just need to know the employees at their expenditure reporting side, because that's part of our fiscal monitoring. What flexibility can you afford to give on the budget side?
But that's what I'm saying, because when they submit, when there is a change, right, it's not changing the budget, but what it is changing is the name of the people. Mm-hmm. So every time there is a change, they can still have a tracking document, some sort of a table that has the original list, right, of the people listed on the budget, and then that way, every time there's a change, there is the names of the people. There's another column with the names of the people that are being replaced, the dates, all that sort of thing. So that way, Tony always has an update as to all the names that are associated with the particular budget.
But that's the same thing as doing a budget mod. It's just another table that we have to enter data. So.
But I would think that this would be included in the expenditure report. Is that
correct? Yeah.
So I think that would be easier for us having to do, because sometimes on our end, if we provide that budget modification and we have a new person on our grant, and if that budget modification doesn't get approved right away, then Ben won't pay it, because Joe Smith now is no longer there, but Mary Smith is down there, but our budget hasn't changed. So then we don't get funded. So it delays us getting money because our budget still has to be approved. We submit it, but it doesn't always get approved by the next expenditure.
And it also makes the revisions too often because changes in employees change all throughout the year. I kind of see both sides. If you want to know what I think, we can talk on Reddit. But definitely something that needs to be addressed in the directive, guys, okay? Program, team, I leave that up to you.
Going back to my question about how many budget modifications, I think a lot of the questions have been answered and it's going to be reviewed internally within the city. But we're going back to the situation with the budgets not being approved on time and staff changes taking place all the time. Here at Goodwill, we would like to do the budget modifications as the changes are taking place to make sure we actually have accurate records. But one of our staff has a questions about changes after March when the deadline has hit.
Nancy, I could answer that question. In the past, I've always accepted budgets after March. I do remind the agencies that the deadline is March 31st every year, but I've done budgets in May and June. It's not a problem. Like Tony said, we still work with it's up to the program monitor, and I've never had a problem. My colleagues never had a problem to do a budget after March 31st. I'm sure, and the adult system.
That's great. Thank you. Thank you, Ramon.
Now, Nancy, not to elaborate a little bit on that, I would say that it does become a problem when we ask for at least a modification on the 31st and you wait till June to give it to us, instead of not giving us something during the deadline, and then now we have nothing to work with. So at least provide us with something, and then, like I said, we're always willing to work with you guys.
Right. You know what? I've only been here at Goodwill for about a year and a half, and I know that last year we were able to, do all the budget modifications we needed. But I know there's been a lot of changes recently, and we expect that maybe in the near future we're going to have that issue. So I just want to make sure that we're on track on doing what we have to do internally here at Goodwill.
Now, I will say this: that the only one that we do have difficulties with is with any county grants, because the county has a hard deadline on June 30th for all expenditures, and that becomes problematic for us because when we're trying to make modifications, they give us a short deadline to do our closeouts. And so those are the ones that we actually ask that that you provide us as soon as possible. And the reason for the beginning is because sometimes that may require for me to go back to the work systems budget for the county, and I have to change all the numbers. So that's why I need enough time to be able to make those adjustments and have the county approve that. And as slow as we are sometimes, the county is equally as slow as we are. So that's why we need some time.
Did you say that on record?
It's being recorded, Tony.
And Kayum actually just added that one of the reasons that delayed the payments is when there's a budget revision that's pending at closeout time. So that means they have to wait for that approval. They have to do another set of analysis. So those revisions kind of delay the closeout process and the payment process, just to add to Tony, because Kayum just actually said that. Is that the last question? My God, this is a hot topic. If there's any question that we didn't answer, FMD, if you could keep track of those, I want to make sure that we at least provide some answer at some point, if not today. Okay, so tomorrow we will be discussing cost allocation, that's direct and indirect. We're going to talk about cost objectives, indirect cost rates, allocation basis, and then we'll talk about the financial reporting requirements of EWDD. Okay, for those who are not with EWDD, that's something that you may want to listen to also, just to make sure you guys are doing the same, or at least something similar in your organizations. And maybe you can pick up some from what we're doing. Okay. And then later in the afternoon, we will talk about specific conditions, audit, the fiscal monitoring process, the repayment plan, if you can no longer resolve it, stand in. What can you propose a stand in so you don't get disallowed, so you don't end up paying back? Those are the topics tomorrow. Okay, so we will start promptly at 9:05. Start logging in before that. I spent 10-15 minutes waiting for people to log in. If you could log in earlier so that we can actually start on time, and I can send you home on time, right? Send you home, like I said, if you're not home already, right? And on time, how's that? And with that, guys, that ends day one of our virtual conference. I'll see you folks tomorrow. Thank you, guys. FMD team, stay. until I dismiss you. Thank you so much. Thank you.
Thank you all.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. Oh, they're logging off now. Even after lunch, we had like 190 people logged in. So it's a big group. And I'm actually really pleased that it's going this smoothly. Not a lot of interruptions, not a lot of off-tangent questions. So we pretty much have it in control, even if it's a big group. So that's amazing, I think. All right.
Yeah.
I still see a lot of people. You guys don't want to go home?
Are we going to see your mom? Is she going to say hi?
My mom, is my mom here? My brother is still here. No, I sent them the link just so, you know, they haven't seen me for 7 days preparing for this fiscal training. The only way they'll see their daughter is they join the Zoom link. Right? Hey, Mom, I'm okay.
That's here too.
Yeah, I'll be home. I've been locked in my room preparing for this, really, because I didn't have a lot of time, but it's okay. I mean, I think people are very, I see the chat here. They're very thankful. So it was all worth it. So, so I'll see you guys tomorrow, guys.
Yeah.
Bye-bye. And my brother, I will see by the end of this week. So
yeah.
And I'll see you soon.
Congratulations.
All right.
Nice training.
FMD stay.
Nice seeing you, Fred. Bye-bye.
All right. See you. Yeah.
Fred, maybe tomorrow first thing. Okay.
Yeah.
You were texting me and you said you didn't get the link, so I wasn't able to address you first thing. And then, of course, I got deep into the training. But tomorrow, speak again so you can say hi to everybody. Okay, Uncle Fred, you're attending tomorrow, right?
Yeah.
Fred? Yeah. Okay.
Yeah.
How was it? How was it, guys?
All right.
Good.
Awesome.
This is the you have to use the reaction.
Hold on.
Reaction button.
Edwin,
Yeah.
I think that, there's some sub-recipient,